Jim, we've just blown up a decade of zero interest rate policy, a decade of it, of QE, trillions of dollars of negative interest rates. And Jim, you and I, Priya as well, we're all trying to work out whether we ever revisit that, whether any of that actually sticks. Do you think it does?
Yeah, if you're talking about going back to zero rates, I don't think, at least in this cycle, we're going to have to run through an entire cycle, probably one or two recessions, and then maybe the economy reorients itself and we could visit the idea of going to zero rates. But for right now, I think it's pretty obvious that the 35, 40-year bull market in bonds is over. We're in a period of higher rates now. How much higher and how long it's going to take would be the debate, and that really depends on where inflation peaks, how low inflation goes. Does it settle out at 2% or does it settle out at 4%? But I do think if anybody's hoping for those period of the pre-COVID period where the market goes to zero, the Fed prints money, and everything rallies because we've got liquidity sloshing around in the system, I think that is a bygone era right now.
So, Jim, what do you think will break the positive correlation between bonds and stocks? Because surely this doesn't hold indefinitely.
Well, it already is breaking to some degree. If you look at the shorter-term correlations, we're at a 15-year high. We've seen the price of bonds and the price of stocks move together to the most that we've seen basically since 2007. And any wealth manager that's managing a 60-40 portfolio knows this painfully well because both their stock and their bond portfolios are falling at the same time. Typically, when that happens, you get that positive correlation. It's in a period that people are worried about inflation. And we're in a period where people are worried about inflation. So what ends that? If we end the period of worrying about the inflation. Well, we might peak inflation soon, but that doesn't end the worry. The worry might come years later. So it's going to be a while, I think, before we see stocks and bonds revert back to what we saw between, say, 2000 and 2020.